Okay, welcome everyone to this deep dive. We've got a really interesting set of sources today. We're looking closely at something making big waves, which is the recent trends in digital asset investment products.
That's right. We're digging into a report that tracks, where the serious money is going, the inflows, and sometimes the outflows for these specific investment vehicles people use to get exposure to crypto.
Yeah, things like Bitcoin ETFs, Ethereum trusts, that kind of thing.
Exactly those. Products designed for accessing the space.
And our goal here is really to break this down for you. The report shows some, frankly, record-breaking numbers, but there are also some quite intriguing, maybe even contradictory things happening under the hood,
Yeah.
especially when you look at different assets like Bitcoin versus Ethereum or XRP. We want to help you figure out what these numbers actually mean if you're trying to navigate this market.
Couldn't have said it better.
Yeah.
The big picture looks incredibly bullish, right? Unprecedented inflows. But once you get into the details, you definitely see signs of caution, some really notable differences between assets. Tells a more complicated story.
Okay, so let's dive right in. The headline numbers are, well, pretty amazing. The source says digital asset investment products attracted a massive $3.3 billion in inflows just last week.
Yeah, massive is the right word. And I mean, to give that some context, that single week pushed the total for 2024 so far, the year-to-date figure, to a record $10.8 billion.
Wow, $10.8 billion already this year.
Already. We haven't seen capital flow into these kinds of products at this rate before. It's significant.
And that means the total value locked up in these products, the assets under management or AUM, that hit a high too.
It did, yeah. Briefly touched an all-time peak of $187.5 billion. That's a substantial amount of capital.
Definitely a lot of zeros. So what's driving this? Is it just hype or something more?
Well, the report links it to a couple of things. We've known institutional interest has been growing. That's one piece. But there also seems to be a connection to wider macroeconomic concerns.
Like what?
Things like, rising government bond yields, maybe some worries following recent credit rating actions in traditional finance. It seems some bigger players might be looking at digital assets as a serious alternative allocation right now.
Okay, so it's partly strategic positioning in the broader financial world, not just crypto-specific excitement.
Seems that way.
And this wasn't just a flash in the pan, this huge inflow week.
No, not at all. The report points out this is actually the 6th week in a row that we've seen inflows.
6 weeks straight.
Yep. And over that 6-week period, the total inflow is about $10.5 billion. That kind of consistency suggests something more than just short-term speculation. It looks like sustained capital allocation.
Right, sustained interest. So geographically, where's all this money coming from? Is it spread out?
Not really spread out, no. The data is really clear on this. The United States is just way out in front.
How far in front?
$3.2 billion of last week's $3.3 billion global total flowed into U.S.-based products.
Whoa, $3.2 billion out of $3.3 billion. That's almost everything.
It's incredibly dominant.
Yeah.
It really highlights how important the structure and, frankly, the accessibility of things like those new U.S. spot Bitcoin ETFs are. They're acting like a magnet for global capital wanting crypto exposure, not just U.S. money.
So it's global capital using U.S. vehicles.
Largely, yes. Other places saw inflows too, but much smaller.
Yeah.
Germany, maybe $41.5 million. Australia, $10.9 million. Hong Kong, around $33 million.
Okay. Anywhere seeing money leave these products? Outflows?
Yes. Actually, Switzerland saw about $16.6 million in outflows. The report suggests that might be some profit-taking, after the recent price run-ups.
Interesting. So even with the flood coming in overall, there are pockets moving the other way.
Exactly. Shows different regional dynamics or investor decisions at play.
Okay, let's switch gears then. Which specific assets are getting the lion's share of this capital?
No surprise here, really.
Yeah.
Bitcoin is still king. It pulled in a colossal $2.9 billion in inflows last week.
$2.9 billion. So basically, almost all of the huge $3.3 billion global inflow went straight into Bitcoin products.
Pretty much, yeah.
Yeah.
Bitcoin products alone have grabbed over 25% of all the money that's flowed into digital asset products this year. It's clearly the main entry point for most people using these investment vehicles.
Right. Okay, now here's where it gets really interesting for me. Billions are going into products betting on Bitcoin going up, the long Bitcoin products. But the source also flags a noticeable rise in money going into products that bet on Bitcoin's price going down.
Yes, this is a really key detail. Adds a layer of complexity. Short Bitcoin products, the ones that profit if the price falls, saw their biggest weekly inflow since December. About $12.7 million went into them last week.
Okay, wait. So at the exact same time that record amounts are flowing into long Bitcoin,
Yeah.
people are also putting a significant chunk, the most in months, into short Bitcoin. What does that suggest?
It suggests a couple of things are happening simultaneously. The main trend is obviously bullish, no question, but this inflow into shorts tells us some investors are maybe hedging their bets.
Protecting their existing long positions.
Could be hedging, could be active risk management, or maybe some are anticipating a potential pullback after the recent price surge and positioning for that.
Right.
It signals, a degree of caution or strategic play rather than just universal optimism. It's a sign of a more mature market, maybe, where people aren't all doing the same thing.
That divergence is fascinating to see captured in the numbers. Okay, what about other major coins? How did Ethereum do last week?
Ethereum actually had a strong week, a real rebound. It saw its highest single weekly inflow in over 3 months. $326 million came in.
$326 million for ETH. That's pretty solid. Has it been attracting money lately?
It has, yeah. This makes it 5 weeks in a row of positive net flows for Ethereum products. The report kind of connects this to improving sentiment around ETH specifically, maybe looking ahead to future upgrades or developments, plus just growing interest in ways to invest in it easily.
Okay, so positive signs strengthening for Ethereum. Now, we have to talk about XRP because the data there looks completely different. Quite dramatic, actually.
Yeah, this was probably the biggest surprise in the whole report, honestly. XRP saw its first outflows in, wait for it, 80 weeks.
80 weeks. That's what, nearly 2 years? A year and a half, easily.
A little over a year and a half, yeah.
Yep.
A really long, consistent run of inflows just suddenly stopped.
And was it a big outflow or
Yeah.
just a trickle?
No, it was substantial. $37.2 million left XRP products last week. And the report notes that this is the single largest weekly outflow ever recorded for XRP products.
The largest ever weekly outflow, breaking an 80-week streak. Wow, that is a sharp U-turn. Any idea what could be behind such a dramatic shift?
It's significant, no doubt. A move like that, especially the record size, could mean a real change in how investors are viewing XRP right now, maybe tied to some specific news about XRP, or perhaps just caught in some wider altcoin volatility that's hitting it harder than, say, Bitcoin or Ethereum. It really underscores how, even when the overall market seems flooded with cash, individual assets can have very, very different trajectories based on specific sentiment or factors.
Okay, let me try and recap the main points then. We've got record overall investment hitting digital assets $3.3 billion last week, $10.8 billion total for the year so far.
Yep, record levels.
Driven by big institutions, maybe some macro worries, and overwhelmingly flowing through the U.S.
That's the geographic picture.
Bitcoin is sucking out most of that cash, but, and this is key, there's also notable money flowing into short Bitcoin positions, suggesting some hedging or caution.
Right, that divergence is important.
Meanwhile, Ethereum is showing a solid multi-week rebound in inflows.
Strong comeback there.
And then, boom, XRP sees its largest outflow ever, snapping that incredibly long 80-week inflow streak.
That's the surprising twist, yeah.
So these figures, they're not just numbers, are they? They're showing us how investors are feeling, how they're moving their money around in this complex global situation.
Exactly. They're a snapshot of shifting confidence, different risk appetites, and actual capital deployment strategy. You see this picture of huge sums coming in, definitely. But also clear signs of caution, strategic hedging, and these really stark differences in how individual assets are performing or being treated by investors right now.
So thinking about this from your perspective, as someone watching or maybe involved in this market, what does it all mean? You see these record inflows, especially for Bitcoin and Ethereum now bouncing back, but then you see the biggest outflow ever for XRP and people actively betting against Bitcoin even as others pile in. What does this mix of real enthusiasm but also profit-taking, hedging, and sharp asset-specific caution? What does it tell us about how confident the market really is moving forward? And what could these diverging trends mean for the stability or the future direction of different digital assets within this high-stakes environment? Definitely something to ponder as you digest these fascinating numbers.